What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, the last 2 days we have seen firsthand what can happen to a stock when there are 0 shares available to be shorted. When there is nothing but buying pressure, there is no selling volume, there is no shorting volume, it is only buying volume. What can happen to a stock? Doesn't matter what the company does, doesn't matter when it IPO'd, where it's sitting at, what the fundamentals are, the finances, the market cap, anything. When it's sole buying pressure, even if the volume is low, we've seen firsthand what can happen. I'm going to break everything down for you in this video to give you a really good visualization. So let's get right into it. First off, AMC tapping that $17 level, up almost 10% on the day, as many small caps and heavily shorted stocks took a lot of attention after this stock ran an astronomical amount, all the way from about $13 back on the 19th of July to over $2,500. Okay, as you can see, the volume has even started to decline as the price has just gotten to be a little bit too high and the spreads are astronomical. Okay, the difference between the bid and the ask is wild, sometimes over $200-300. But this is what happens when there are 0 shares available to be shorted. And I'm not saying, okay, that we look on Ortex or Fintel, or even Stock Tracker, and it says, shares on loan are available to borrow, and that number is 0. I'm talking that brokers cannot locate any shares to be able to lend out to their traders that utilize their platforms available for shorting. Now, in the shorting community, okay, which by the way, there are people that only short stocks that are heavily run up, okay? And I'll get into that in just a moment. But in the shorting, community, there's a term called locates. And a lot of times if you dive into this, or if you've seen this on Twitter, okay, or anywhere else on the internet, how much are locates? It's basically saying how much are these brokers going to charge me, okay, in order to short a specific stock? And this happens, okay, with stocks that run up like crazy, because you know that this stock that went from 13 to 2,500, eventually it's going to come back down. Now, it might continue to run to 5,000, even more, who knows, but eventually it's going to come back down. And there are certain people that's all they do. They focus on shorting high momentum. They wait for, the retail longs to get bored of it, and they capitalize to the downside. Now, you're not going to be able to utilize a brokerage like TD Ameritrade or Webull or Fidelity. And as you can see right up here, this is this NTB category. Now, on TD Ameritrade, there are 3 different categories. There's ETB, easy to borrow, HTB, hard to borrow, which AMC and Tesla fall into, and NTB, which means there's none to borrow. Now, a stock that is easy to borrow would be something like, Microsoft, or an ETF like SPY. Hard to borrow, okay, easy to borrow means anybody who utilizes that platform can use it. Hard to borrow would be something like GameStop, AMC, Tesla, which you have to get approval from the specific brokerage, and you're probably gonna have to pay a fee, all right, and have some experience, have a higher account, but you're gonna have to get approval through something like TD Ameritrade in order to do it. And then NTB means, listen, doesn't matter who you are, we have no shares that we can short. But there are specific companies and platforms out there that specialize in this. So first of all, let's talk about exactly what a locate is. All right, it is an approval from a broker that needs to be obtained prior to effecting a short sale in any equity security. The requirement in the United States to locate a stock before shorting has existed for a long time. However, like I just had stated, okay, in other situations such as, we'll use SPY as an example, which is an ETF, that there's no need to be able to locate right away. It's an automatic ability, all right? And when there's a hard to borrow, there are certain individuals who utilize certain platforms that have that automatic ability without having to locate. So even though it says this is a requirement, there is a big difference. So let's talk about exactly what these locates are, all right? And you can look. So HKD, this is from a tweet that came out from Modern Rock. I don't really follow this guy too much exactly what he does. However, he is very focused on shorting. All right. And like I said, I've looked at it. I don't want to say following him, but I've known him for quite some time. So HKD locates now cost $113.25 a share. This came out at 110 today, meaning that if you want to short this, you have to pay $113 per day per share to your broker. Whether you lose on this position or not, that is completely gone. But when you just search HKD locates, you can see where his tweet is up at the top. This one even says that there are no locates. You scroll down even further, okay? This guy says HKD locates. How much will it be able to cost tomorrow? This individual also says, does any broker even have locates? I have no locates in all brokers. There's another one, no locates for HKD in Trade Zero, meaning that there are no shares to be able to be shorted. So inevitably, okay, if shares were, how it should be, okay, obtained and held by yourself, long in a position, not available to be lent out, this is what happens to a stock when there's no shorting ability. Now, if you wanted to try to short, like I said, you're not going to use something like Webull or TD Ameritrade, but you focus in on Trade Zero, which says hot shorts. It focuses on this. You look at something like Centerpoint. You even look at Centerpoint on their Why Us page and scroll down just a little bit. It says unrivaled access to short inventory. Another one is also Cobra. All right, it's the best online broker for short selling with over $25,000. This is what, 3 years in a row. These are platforms that specialize specifically in shorting, and they were not able to do that. Now, who sets the rules, okay, and how they're able to locate, or who's holding the shares for their, ability to be able to locate? That's a completely different topic. But just the fact that I want to focus on, when brokers are allowed to lend out your shares, okay, in order to be shorted, all right, with absolutely no fee given, when it's just completely easy and no access to locate right away, just because at one time it was easy to borrow, even though when there's a serious amount of buying pressure, when there's holding pressure, when there's, DRSing, like with the GameStop, with a huge majority of the float, when even that float splits, this is what happens when the change and when it is played. Now, was this stock completely manipulated by probably large funds, large institutions? Okay, as you can see, retail probably wasn't getting into it that much. Maybe they were a share here, maybe 10 shares, but when it comes to 100 shares, a couple hundred shares, probably just big funds getting into this. But it shows the magnitude of what can happen to a ticker, okay? No matter what the price is, no matter what it does, when the ability to short is not readily available. So just wanted to give you a visualization. I take a look, start to do some research on exactly what locates are. You might get, want to, explore even further about these brokerages. But like I said, it just gives you a very good example of what happens when there's no ability to short. So that's it for this video, guys. I'll see you in the next one.